North America, good morning, good afternoon, and good evening. And some of you, it's probably Saturday already, which is really nice. Um, what we have going on today is you can see the dollar index right there moving down with that interest rate move yesterday. It was one of the most powerful interest rate moves I've seen in about, well, since the beginning of the QE. So that's what it really came down to. Is it looked like a major short covering rally. I kind of thought of it as more of a dead cat bounce, but we're still firm here today. Let's see what we got going on. So you can see on J4X right there. Oh, and let me just double check the chat line. Let me do that. There we are. Here if there's sound there and so forth. There we are. Do we hear ourselves? Can you? Yeah, I do. Excellent. All right. So you can see there the red on the dollar index for like the last 5 days or 6 days. I guess it's six now right there. You can see that from there down. And then over, let's see, was it right there? There we are. You can see it all movement down starting from this top here. You can see the green line piercing on the J4X. And at the same time over in Chicago Quant, confirming the same situation. We got three greens, reds, and then a green, and then two more reds. And we've been in a sell since here, so that's fine. It's all matching up very well. You can see we are flirting very comfortably with the zero line right there, and we're going to be in a sell this week unless something miraculously shifts in the sense of a lack of faith. But I would assume this will be, this reminds me of a good dead cat bounce and a short squeeze. So what I'm really figuring in the end is that we get like a couple weeks of this back and forth, so on and so forth. In other words, it has that total look, and the action and the speed said it very clearly how hungry they were to close their positions. Now the question really comes down to is how much will they want to get long? And I would assume, as we've been assuming before, and that is that it's in the dividend paying stocks. Hence why we had an incredibly great move in the tech or the tech 100, but we also had a great move. Also, I think it was a 6.5-7% move in the tech 100, which has been down like what was it 34-35% for the year. So that pressure on the tech because of the high interest rates, because they're very interest sensitive. The moment you saw this big move in the 10-year and so forth, and let's put the bonds up there. Let's do it this way. We'll do it through looking at them. Well, first we can look at them through a chart real quick. Let's see, where's it at? And there is the 30-year, and you can see that massive move. Nothing like that. I mean, we had a little downturn back in late September. You can see a couple of them, but this was a very powerful move for the last couple of days, and then bang, it really took off, confirmed by the CPI, which we were expecting to see, a good number and a bad number combination, internally bad, good headline, that type of thing, and it just excited people. 7.7. We're expecting it to tail off around the high sixes, but that's still not a good thing because we're looking at interest rates now. Let's put them up there. Let me find the interest rates, and we'll put them up, and you'll be able to see the exact numbers. And it's like we really need the interest rates to and the inflation matched together. That's usually the way it works. Now, to start treating it more seriously. And as you can see right here, you see we had some really incredibly great moves. I mean, the 1 year now is yielding 4.6. Now, obviously, the interest starved investors are still reaching for things like that, which means it was up around the 4.75 at this point. You can see the 6 month is 4.5. So in the short term, they know that there's a problem. And then when you go, and what markets like to do is anticipate the further out. So you can see here, I'm not sure if these are big enough, but let's see if we can go like this. We can do it like that. Yeah, there we are. That might help out a little bit. And let's move this over a little bit, like so. Or maybe to go like that, there. so you can see the rates themselves. Can you see those? No, you can see the rates, but you can't see the maturities. That's what we refer to it as the maturities. And there's the maturities right there. So you can see, there's your 6-month yielding 4.5. And then we can go down to just looking at the 2-year, comparing 4.33 versus the British 2-year at 3.18. Whole percentage down. The German Republic, 10-year, that's where they start off reflecting, and that's at 2 and basically an eighth. That's how we look at that, 2.112 or 212, something like that. And you can see the 2-year here in the States is 4.3. It's double. So the United States is paying double the amount of interest on a 10-year. Where's it at? There's the 10-year. 3.8. No, it's not double. It's basically 50%, a little more than 50%. And so actually it's like 67%. And you can see the 20-year where we have it. Actually, let's go to the 30-year. There's the 30-year, 2.1, I guess you could 10. No, 6 would be 1 full point. So would be 2.1, and our 30-year is yielding 4. Actually, that is double. 4.059 versus 2.065. It's literally almost double. So, the world is starved for some return. How much of a decade did we watch? In other words, how was it, 9-10 years of 0 or minus interest rates? In other words, you were a fund manager. You bought bonds in your home country in Europe and ended up paying interest to the government, not the government paying you interest. So that's why it was such a real aggressive move, because there's a lot of starvation of yield. People need yield. I mean, fund managers don't get paid to lose money; they get paid to make money. So that's the gist of it all. So that's where we stand. All right. So you can see there. Let's go back to the dollar index. So you can see that interest rate situation is a real quagmire for investment managers and retirees and pension funds and so forth and so on. It just cavalcades. In other words, it's like a domino effect. It goes down the line. And so you can see here the dollar index dropped because they've been anticipating interest rates to go down. That's what we've been talking about for like the last almost 2 weeks now. We were saying that they're anticipating dollar interest rates to go down. That's why I've been saying, for 5-6 months, we're looking for the end of the year of metals complex to go up in value. As we take a sip of our tea, and then obviously we can give you a quick view of that at the same time. You can see gold, has been rising. They've been anticipating. The economists have been saying to us. I've been hearing economists, put their numbers out, saying, it's going to be good on this level, but bad on that level, and that's exactly how it played out. And so the headline number is the one that got everybody excited, but the internals are not cleaning themselves up much, and that headline number can get down into the high 6s too. It won't take much, but the problem is that it's going to stall in those 6s. So what we can, money managers try to use fundamentals to justify their investing, even when they know that the as Giannis has shown, the fundamentals have kind of dissipated. They still do. It's in their manifesto of incorporation. So you can see here, we're looking at 1762. We're looking at gold that's made just over the last, 6-7 days. I guess what's that? There's 2, 4, 6. Over the last 7 days, gold has gone from $1,630 to today's high of $1,769. Okay, almost a $140 move. And that's what we've been talking about, is this time of the year we expect to see the metals complex get some grip and get going. As we were saying, platinum is in a buy. Join in on this with the daily and the weekly of the silver and the gold. And that's exactly what's happened. And you can see here, same situation. Silver no more than, was it 2, 4, 6, is it 3, 6, 7? Yeah, 7 days back. Matter of fact, it's kind of interesting when you go further back. It made even deeper lows compared to gold. Let's go back to the gold real quick. And this is just trying to describe, See, it made an actual low on no more than 7 days ago. That was one of the lowest lows we've seen in a long time. You can see that there. And let's put the gold up on the. Where's it at? Right there. There's the gold. Where's it at? Right there. There's the gold. And same situation. In other words, those lows were set on this product all the way back in what is that? September. They really put, and it's been trying to lift up because a lot of money knew that the interest rate. In other words, like Art Laffer and some of the other economists have been expecting this. They're not cheering it on. They're not saying buy stocks. They're saying basically buy dividend stocks, and because they think that the lows are going to be retraced to again. So we'll have to see. I guess, and once the election is completely over with, and we know the full numbers, right now it's still almost a coin flip for who takes the Senate. The House, that's all clear. It looks like a good 26. The Republicans have about 226 seats. I know the Associated Press and so forth are dragging their feet, but that's what we're hearing is that 226. Just like we were hearing that inflation is going to curve. It's starting to curve, and it's the same thing. We're hearing that the seats, more than likely, we have about 226 seats on the new Congress coming up on the Republican side. So that's where we stand. So let's jump now back to the currency, unless someone wants to see something. But we're going to jump over to the euro. All right, there. And there is the euro. You can see the euro has been celebrating the same move, and that's why we've been saying with this weekly buy for the last couple of weeks, every time it flirts with the weekly sell, it finds a way to climb back up, and that last daily buy has been a real winner chicken dinner. And let's put it up over on J4X. There he is. So there you can see the same move going on. It's been in a buy. Actually, it's at the top end of its range too. You can see that right here. There's the top end of its range. It's trying to show weakness, but overall, with the green hinky ASCIIs, it's confirming the strength is still there. And then obviously over on Chicago Quant, same situation right here. And we can go and show you the weekly on J4X right there. You'll see the same thing, strength for the last 3 weeks. There's been pressure on the upside. And the only difference really is that we're about, there's a correlation about 69, 68%. The difference is at the time frame. We're hours and sometimes even a day ahead of time. It's rare that this is the opposite. So, all right, from there we slide over to the cable. Well, I saw a really strange headline with the cable about the police chief of London going after the newspapers for, I guess they've been pushing zero oil or something like that. They're fighting to, the media seems to want to remove all oil from society altogether. Sounds very strange to me. Oh, there's a headline. Warren Buffett still isn't buying stocks. Exactly. That's what I've been saying here. Commodities soar after Chinese quarantine rules. Okay, good for them. So, yeah, there's some really strange things going on when it comes. That's it. UK police chief questions just stop oil media coverage. Just stop oil. They want, in other words, it's a hindrance. Who is pushing this idea that we can walk away from fossil fuels? It's one of the more stranger confusions out there and like as if it has any effect on the planet. As far as we can tell, it has no effect on the planet. So the whole movement is very strange. All right, from there we go to the cable, and there's the cable, and you can see it there. Kind of same situation, moving up, been much firmer. It tried to fail right here last week and didn't, and it's battling to constantly find the upside there. We were impressed with the way it. Well, let's move this over now, like that. There we are, and we were impressed with the way the cable had hit the 16 area, and then corrected a little bit, and now it's gotten into this daily buy. That's a weekly buy there, so you got 4 weeks here. So it tried to do it here, and then it kind of bounced around, and then you can see that there's 4 weeks here on the buy for J4X. Constantly giving you that warning that there's strength coming. You see all that right there, and sure enough, there's one of them where it's ahead of the curve for us. Metho, where you been hiding? And we're going to slide over to the daily right there. And you can see the daily is doing the same thing and trying to top out a little bit. It's kind of odd. We'll see how that plays out. You can see the curvish thing going on here. I think they're just going to stay firm. But I do think this is a dead cat bounce overall in the interest rate arena. Had to work. Okay. Out on the oil platform out in the North Sea. Up in the Baltic. Now shorting Dow Jones. We're waiting. We feel the same way. I want to put on some put spreads, I think this has about a 2 or 3 week period. Intraday, of course. There's. I can show you the intraday today. It's been. Let's give you the big chart. This is the 2369. You can see it's done a little topping in here. Let's see if we can tighten this up a little bit from yesterday. So what it did is the Asian hours showed even more strength, and there's the London Open, the Swiss Open, in other words, European Open, the Frankfurt Open, that stuff there, and they started to sell it down. And you can see, if we just go like this, so we move this over a little bit for you, like so. You can see like right there, they started to sell it off with the European Open, and let's see if we can. I guess we should try to move this up a little bit to make it a little bit more identifiable, and let's make it thickerish too, like that. There we go. That makes it look better, doesn't it? So you can see there, they pressed into the sell right here, and we had a nice little slide from the 90 down to the 80, about 10 handles, not bad. And then tried to bounce a little bit in here. As a matter of fact, it was a real attempt that failed, and then they pushed it back into a sell, then tried to get back into the buy again. These indicators down here, especially this is the one I pay attention to the most. Let me see. I'll show you to you here. When it comes, I like the two of them to match up. And I have a little fudge factor situation right here. I can actually make it thickerish because when it hits that and fails, it tells me that we're seeing the weakness. This is an intraday chart. And now you can see it's trying to dig its heels in and try to get across the zero line right there. You can see that there. But yeah, the pressure has been on it. Almost dropped about 18 handles from the high. And we're looking at that and thinking the same thing. Now when we go over to the S&P right there, you see it's holding on, let's put it that way. And it's also, 3 weeks in a buy. And so it's been trying to tell us, just like everything else. In other words, all the money was betting on that, and it has happened, North Sea is too cold. Of course it is. It is. That's hence the name, North Sea. Yeah, no, I hear you. That's funny. I agree. And matter of fact, I thought we saw, just for the sake of it, I just saw oil. Let's just check oil out. Yeah, oil is trying to get back into a buy here. A little strength there. That's been kind of curious. It's also flirting with the weekly sell right there at the same time. So I guess Brent might be. Let's take a look at Brent. Where is Brent? I bet Brent is like 94. Whoa. 96. Wow, they are lifting it up. The high was what? About 98? 90. Did it really make a century? Did it break the century? I thought it was like 98.9 or something like that. And this is a Hinky-Ashky, so remember that's a multiple of 2, so it does all kinds of odd math to itself. And you can see there the histogram, or the slow and fast-moving stochastic is trying to turn as we speak, just as we're doing here on Chicago Quant, right there. But the weekly is still pressing down. Let's see how it looks on here on the weekly. It's at the top end of its range. So it's trying to tell us that there's pressure coming. Whereas we're already... We'll see how they do today. If they hold up in here, then we may close in a weekly sell. Do I really believe in going into the winter that we're going to see lower prices? I doubt it. That would surprise me enormously. There we go. Back to the daily. Now, back to the currencies. And let's take a look at the Swiss franc. And there it is right there. Yeah, for a change, it's joined in with the rest of the currencies, which is really nice because the Swiss has been, that and the yen have been marching in a different beat. And that was because of inflation and interest rates as far as I was concerned. So let's put that up there on the chart. There we are. And there we see it. You see, it's been marching down. And we got the weekly very firm into the sell side. Right there. After 11 weeks, is it? I think it's like 11 weeks in a buy. The math picked up the confusion that was going on with and we've seen it. It's been very fascinating over the last 11 weeks. The Federal Reserve has been doing swaps for the government to their central bank in Switzerland. So they've been really propping up whatever problem there is with the private bank. It seems to have been resolved for the time being. We had heard there was an $8 billion margin call coming over the next 12 months. So I guess they wanted to get ahead of it instead of behind it. Makes sense to me. All right. From there, we drift over to... Where do we go? So we go to the yen. See what the yen is doing. Right there. And the yen looks just like the Swiss, doing the same thing, marching down. And we talked about it getting back down into the 39.40 area, 35 area. I think we talked about right around in here, 36. So they've really marched down nicely from that interest rate shift, helping out Japan, and that they've needed it too. Now we don't have numbers, and I mentioned this yesterday. We've just heard rumors or stories that the Federal Reserve has been helping Japan, but not like we saw with Switzerland, where we actually saw the swaps recorded. So we just know that this has been going on, and it's it's obviously there's problems. All right, from the yen we go over to the Turkish lira right there, and that's cracking through the 1900 area when it comes to the euro Turkish lira. Let's see what they're doing with the dollar Turkish lira. Right there. And that's kind of stalled. Now you've got a contango going on with the euro versus the dollar Turkish lira, which is kind of curious in its own right. You can see it's a lot of noise in there. Look at those hinky ASCII bars. Look like a static oscilloscope, that type of thing. You see a little curve going on in here. We have been 40 weeks in a buy. The question, will it survive this week? It's gotten very close to the zero line. And then we'll go back to what I think is the better tool to trade, and that's solely because location. A lot of the European Union is bordering or right near Turkey, so you have to imagine there is trading going on much better than there is with the United States. And hence the dollar Turkish lira should be a kind of a sloppy trade at this point. You can see there the last 6 days in a daily buy and in the weekly buy. So it's been reading this event coming on. All right. Too cold, huh, Metho? Too cold. I hear you. I used to like it when Wilco, he's a presenter on Dukascopy years ago, and we're still in contact. And he used to put these pictures of him camping. He's in Sweden, I believe it is. And so he was always like, up in Norway or, Finland, these lakes and so forth. He was always putting pictures up of him in the wintertime camping. nice tent. He had nice equipment. It was very entertaining. So, all right. From there, we go over to the CAD. And obviously, with the CAD going down, we're thinking, obviously, crude oil is going up. So we'll put crude up on J4X. Right there. Yeah, I hear you. November at the North Sea is only fun for Britain. And you can see there. Yeah, snow and all that other stuff. It's okay. You have to be prepared for it. And it's not as fun as obviously being out in daylight and so forth and sunshine. As you see there, as we sip our tea, you see there the CAD is in its second week of its weekly sell, and it's been in a daily sell all the way down. It tried to almost give us a head fake there, but it failed at it. And let's just take a look at it again. We'll switch them around. We'll go with CAD on J4X right there. And we'll take a look at the weekly, like so. This should be the third week, or is it the second week? Third week, yep, exactly. You can see that pressure on it. And you can see the stochastic's been moving down continuously. And let's see where we go from there. We go back to the daily, like so. And you can see that action where it's just been marching down slowly, same way, for the last 6 days. And you can see it here. We got 3. There's the 6 days. Let's move that out of the way. Put it up top there. There we are. And then when we go and look at oil, as we just did before, you see the coordination of it. You see that strength there. Now, it's kind of interesting as it's been dropping in value, which usually means that Canadian finds a way to go up. So obviously they're not big believers in the idea that energy is going down in value. And this is a pretty good move today too, when you really think about it. It's almost a $5 swing from the low of yesterday, 84.70, to the high today of 89.57. Yeah, so 89.57 is it's over a $5 move. So that's pretty wild from its low to its high. And the world is in the northern hemisphere is getting colder, so there's not much logic to the idea for it to go down in value. All right. From there, we jump over to the South African Rand right there. And you can see the Rand has been breaking down nicely, which it should be doing. And we'll take a peek at it on the weekly there. There's the weekly. And it's these last 2 weeks it's been pressing down, and you can see the curve, the whole bit. And then we go back over to Chicano. We can find the right mouse to grab. There it is. I know you're around here somewhere. There it is. And we go back to the gold, and you can see that's crude oil. There it is. And the gold, doing the same thing. I think it went into the buy here. I'm not sure why this line is underneath, but that's why the line is there. I think I need to check the exchange prices. Double check that. And that's usually the way it rolls. Sometimes the data comes in. Intangible. And then, how do we play it from there? Oh, yes. So, let's see. There we are. Let me just go find it again. Let's see, gold. I want to look at the exchange. There it is. There's the exchange. Let me just double check this a little bit. Because I meant to look at that and fix it. Go back and collect the data up again and see. So, in other words, December gold. Now, what is that? That's back in, I guess, the 21st. So, where was this on the 21st? Yeah, so I see what happened. So, the 21st, that's right. That pop is right. But it might, I think it's higher. I think that's what it is. It took out this high over here, so it's got to be higher. And at the same time, the day before that was an up day. And it was much higher. It was probably the high of almost this. A little bit less. It was right around in this area. And let's see what that was. That's the 19th. Let's check the 19th. I see. Okay. Yeah, so the 19th is inaccurate altogether. That needs to be fixed also. I see what's going on. Okay. I see how I can get that straightened out. All right. We'll work on that over the weekend and make sure it's up to date again. So, from there, we go over to, let's see, not the Japanese, we've done that. So we have one left. And that is, we look at the Mexican peso. And we're really convinced that the peso is trying to tell us something. I'm just not, I've been, I guess, professing what I believe they're trying to tell us. And that is that the 226 seats is going to happen. That's why it's dropping like that. And it's below the range here. Let me just show you how it's drifted below its range. It's well below. It's taken out these lows here. I think it's taken out even more lows further out. For the last couple of years, this range has been very respectable. Let's see. It's been very solid. And let's see. Yep. All the way back to, what is that? That's, no, that's just going back. That's just one. Oh, yeah, it's 2021 in the middle of the year. That's September. Okay, so, it's been pretty good range. It's been very honorable, I guess you could say. And let's put it up on J4X. It'll probably reflect it even better. That's what we like about J4X. It does a better job of collecting up the data. So you'll see here, the range, all the way back to, I guess it was, there's 2020. It spiked 2020 with the COVID. But it was trading underneath it, as you can see, before that. And in other words, a strong America. We were, everything. America was producing, was the swing producer of world oil. Interest rates and inflation were low. Inflation was at 1%. The economy was exploding. We had $6,000 a year increase in earnings for middle class, which was phenomenal. Not government money being thrown at them, the opposite, because of the tax cuts. So, in 1 year, their income spending had expanded $6,000. So that was pretty impressive. And with low inflation of 1%, that means a lot. And so you can see here, it seems like it's trying to come back down to this range here. And I think it's trying to tell us that when the 226 take the house, that if we see more breaking of that range, that'll confirm what we've been thinking, and that is it's basically anticipating the action. And same thing, especially if the Senate, which we think is going to be 51 flip, so it's going to be 51 Republican and 49 Democrat. So we'll see there. We'll know over the next couple of weeks, especially by December 6th. It's going to take a while. There's another runoff election to resolve that in Georgia. All right, so that pretty much cleans up looking at the currencies. Now from there, we drift over to, what were we looking at? We were looking at gold? Yeah, we were looking at gold. So from gold, let's see, let's put that back up in here. And we'll go to silver on J4X. And there's, as you see silver doing the same thing, lifting up nice and firm. You see the strength, that's the weekly. It's been in a buy for a couple weeks, and the daily right there. You see that strength that we've been seeing the same there. Got up into the 22s. Let's put it up on Chicago Quant. Right there. You can see it's flirting around, and that's the strength we've been looking for. But unfortunately, they've really pounded this thing down from the, the 26 area. And you can see it here. That's the problem, is that they just kept on beating it up. Now, I would expect to see it get back to the 26 again. I would think that, especially if we get, the political change that we think we're still expecting to see. It's just being dragged out more, that's all. There we are. And that's where we stand with the metal there. Now let's jump over to copper, because we've seen some strength in copper, and it's doing it again today. There's talk of the lockdown being changed in China, which, again, copper is the gold of China. And you can see it here, 3 weeks in a buy. And over here on J4X, you see the same thing. You see it's been in a buy for a bunch of days right there. Same, I guess, with 3, 6, 7. And the same thing here, 2, 4, 6. Okay, so 6 days there. But, it's been, was it 7 out of 8? That's what it's been there. So let's check out the weekly. I'm sure the weekly is lifting just as well as ours is. You can see there, a good 3 solid weeks. Same situation, showing the same type of strength right there. It's been on a nice launch. So, I mean, the Chinese government knows what they're going to do in the end. I mean, it's not like it's a democracy or something like that. So, they're just front running the game. That's all they're doing, trying to get it turned down and then lifting it up. From there, we look at, again, the platinum has broken through the 1,000 mark. And doing, being the good leader, an indicator that it normally is. When it leads, it does lead. It's it's heading for the $1,100 area, and we're seeing this product go from a little over $921 or $22 to the high today over the same 7-day period of $1,074. So it's a $150 move. We've been in a weekly buy for 3 weeks. We almost got there that week right there. It tried so hard, and the daily defended it, and then it gave us a little sell. We knew not to take that, and then the next buy was obviously even more of a great rampage on the upside. All right, from there, that completes our adventure through metals land, and then from there we go to the energy sector. So there is crude oil, and we can see the same thing with that's the spot month that's getting ready to expire in another 9 days, and then this is the February contract, which is 3 months out, and you can see there, it's lifting the same way. You're getting a daily move there, and the weekly is flirting with the sell. I think the spot is doing the same thing. Let me go back to that. Yeah, they're both flirting with weekly sells. I don't know what that's all about. The math, I know. I double-checked it all. It looks very good. Everything looks fine. So, in other words, the exchange data seems right, unless they're going to put something in there that surprises us from the black pools. And they do that every couple of days. Next thing you know, they're downloading more data, and open interest changes, and the whole bit, and volume changes. The CFTC allows hidden trades for up to 3 days now. And then all of a sudden it's put into the system. From there, and usually our math picks that up. It does a good job of reading it before it happens. But dailies are much better than weeklies to pick it up. And then the next thing you know, Monday they could put more data in going into Tuesday. And the next thing you know, it's in a weekly buy. But the daily is really hard to distort, even with them hiding the trades. All right, from there, and I think we had the North Sea up there too. Let's get that. It was like 96 or 97, something like that. I was really surprised about the North Sea. Yeah, it was 96, I guess. So it's still showing some great strength in there. And you can see it's trying with the two stochastics battling with each other. It's still trying to climb to the highs. Then from there, Nat Gas right there, which is showing some strength this morning. You can see it's just flirting with the 0 line. Let's put that line in there. Right there. Just flirting with it now, just trying to stay up. You can see it's a plus 0.2. The weekly's been in that downtrend. Now, I saw an odd headline this morning. Where is it at? Let's see if we can find it. Let's see. Right, it's a very interesting one about nat gas. Oh, I think they said that. There it is. It says that EU leaders accused U.S. natural gas producers of profiteering follows delicate attempts to convince Norway to sell its gas at a discount, and equally delicate and attempts to convince U.S. producers of the same. Oh. Wait a minute. If they're selling it at a discount, how's their profiteering? EU, let me move this up. I'm going to put this up on the screen. How did they come up with that one? That's a strange headline. Let's see if we can find it here. Where's that button at? I know it's here somewhere. I just had it. How can I... Oh. Now where did that go? Oh, there it is. Okay. So here it is right there. And there's the headline. EU leaders accuse U.S. at... Why is my mouse having problems here? Anyway, end result is you can see it. EU leaders accuse nat gas producers of profiteering. European leaders are unhappy with natural gas prices. Some leaders are insisting that the EU impose a price cap on all natural gas imports regardless of origin. U.S. liquefied natural gas has been more expensive than pipeline gas coming from Russia. Well, that's wrong. That shouldn't be. Because, I mean, you can see... Let me just move this out of the way. Why is my mouse being so unmousy? Oh, there we are. Too much weight, I guess. And what you're seeing here is when you look at natural gas, I mean, we've seen where natural gas has fallen from... Let's do this. Let's put it up on there. There's natural gas. Right there. So we've seen natural gas fall from the $10 area in the States here. You can see it up there. Let's move this out of the way. Something like that right there. You can see it's been up around the $10 area, and it has fallen almost down to the $5 area. Okay, and then here we are at like something like where are we at now? We're at 626. You see that You see JForex has 626 offered, 626.5 offered, and 625.64 bid for. Now it's at 68, but it's a 2. It's not a 9 or it's not a 7.0. And so that's the confusing thing. You can see our weekly. Let's see if we can do this. Move this over a little bit. You see our weekly has been in a weekly sell for a long ride here since the $9 area. So, yeah, I mean, natural gas is being pulled out of the ground here in the States and transacted at $6.27 a cubic foot. And then we keep on hearing stories. Yana says that Dukascopy is going to be putting a contract up there so you can see it. But it's been trading in the $26, $27 area. Yeah, like 5 times more expensive or 4 times more expensive depending on the time. Excuse me. We've seen the highs of natural gas in Europe as high as $31 or 31 31 euros a cubic foot. That's a pretty high number. So yeah, I don't understand how they're selling it, at as expensive as pipeline gas. Took a sip of tea there because I was doing a cough out of nowhere. All right, from there we drift over to the only way we can view European natural gas, and that is through the Spanish company. We watch its stock. Right? Is that it? I think that's it right there. And it's trading in the 25s. You can see that 25.89, 25.85 bid for, under 26. We've seen this product go from almost 30, or a little more than 30, but not touching 31. So we figure it matches with the natural gas on some level. So we've seen that. We've seen it get down to 22, which I guess we're assuming that natural gas in Europe got down to the 22 to 23 area a cubic foot. And now we're seeing, here we see it at basically around, I guess I'm assuming it's 26. And here in the States, it's at 6. So that's a big, 5 times 6 is 30. 4 times 6 is 24. So it's basically 4.3. It's an expensive, I mean, that's a great arbitrage, but, it's one of those arbitrages you're sad for because obviously people are freezing. So it's not a good thing there, right? Metho, say no to freezing, right? Say yes to warmth. And from there, that completes us in the energy sector there. What we can do is we'll check out now the equity side of the universe and see what's going on with the equity. So let's throw the S&P 500 right there onto the charts. And as you can see there, it's got 4 days here. Let's see what the weekly looks like. Yeah, that's weekly. So you got 4 weeks now. This is going to be the 4th week. It's been marching on the upside. And you can see that right there. And it started off in the middle of last week, right there. And so, we were 3.5 weeks in that move on the upside. And you can see here, we were in a daily buy. And yesterday's explosion really pushed it. We were actually in the sell. So you weren't short, you just weren't long for it. And now, obviously, you're long for this nice little move this morning, which, like I said, I think it's a dead cat bounce, and I think it's going to last for a couple weeks. Could be 3 or 4. But we'll see. We'll see how long this plays itself out. I'm sure that the buys will be pretty good. I'm sure there's probably going to be another short squeeze somewhere along the line when shorts realize need no heater. Well, that's even better. See, the warm here. It's warm here. That's cool. And the warmest in November. Yeah, we've been having. Well, we had that. We've been having what do they call it? The M-class flares from the sun. So, and we had one took our ionosphere. What was it last week on Friday going into Saturday? The M-class flare is not a big flare, but it was a flare that was powerful, and it hit our. And it wasn't even aimed. It didn't even flash towards Earth. It flashed to the side of the sun, but it influenced the whole solar system. And the M-class flare hit our ionosphere, and it just went like a balloon being squeezed. It went zzz, which means it added protons to the Earth and energy to the Earth, and the next thing you know, you got a lot of warmth from it. So that, and it's been that way. We've been seeing a lot of M-class flares and so forth going on. Matter of fact, if any, would you like to see what it looks like? I can put it up on the screen, which is kind of neat, we can put that up on the screen if you have an interest in seeing it. And I could show you Friday's M-class flare blast. It was kind of neat. All right, I'll keep on rolling along. Let's go to the Tech 100. And there is the Tech 100. You see that? Closing the daily buy yesterday. And it's been having a hard time. It's just now getting into the weekly buy. And these lows here are incredibly low lows. It keeps on challenging. Oh, you want to see it? Sure. Let me go find it. We'll find it in a few seconds here. Let's see. Let me know if you hear. I'm going to raise my volume, because if I start to hear, something being played besides that, someone talking, we'll cut that out. Let's see, like from there, right there, and then let's see. We had a really interesting M-class flare. Well, here's one right here. Let's see. Let's see if. Let me see. I'm going through all the backdated. Yeah, there's one. That's nice. That was from the 7th. That was Monday, and it shows you the. I think it's solar flare erupts. There it is. That's Mondays. There was one on Friday of last week too. Where's that? Stormwatch, Cosmic Rays, Pole Shift. Yeah, that was on the 6th. That was on Sunday. Huge Sunspot Mantle Effect Satellite. Yeah, that was on the 5th. And let's see what the 4th is. Where is it at? Where's the 4th? There it is right there. Okay. All right, now I'm going to keep my ears
Imagine
open.
What would happen if every person...
Cut the volume as best as I can. I don't hear anything. Do I hear me? Do I hear me? I don't even hear me. What's going on there? Can you still hear me? I wonder what's going on here. Let's see. Let me just cancel this out for the time being. I don't even hear me. Testing 1, 2. You do hear me, right? Okay, now let's skip that. And here we go. We're going to show you the flare. There it is. So what it did is it fired out on the side there, right there. Can you see that? Let me see if you can hear me. Why don't I hear me? That's odd. Let me give a refresh over here. And you can see the solar wind. You see the red marks here, showing the blast on the 3rd to the 4th. And you can see, that's what this was a M class, which is very rare to see. X classes are the real violent ones. Okay, there we go. I just refreshed myself. Okay. And these are the sunspots and the activity. And you can see right there, everything blasted from the side, and then it had effects on the planet there. Let me see if we can go back to it. And then we've had a lot of action over the last couple weeks. And again, let me just pull this over, and you can see there that's a better and a different way of looking at it. You can see the flare right there. Can you see that? There it is. There we go. Let me move that over. There you go. You see that flare right there. And it wasn't aimed at Earth, but it hit our ionosphere and definitely had a heavy effect. So, all right. Let's see what else we do. Go like that. There we are. Yeah, sun eruption. Well, we measure them. We have, you can see we have, NASA has. You have what do you have? You have Parker, and you have about 3 or 4 satellites paying attention to what's going on with the sun, on different ways. So we measure the solar wind, and watch that. Solar wind went from. Let's see. I'll show you what the solar wind did that day. Solar wind is in kilometers. So, let's see. Here we go. Let's see. There it is right there. Let's pause it right there. Whoop. Move it back a little bit so you can see the solar wind. There it is. Okay, here's solar wind. You see the solar wind went from 450 kilometers a second up to over almost 650 kilometers a second over that 24-hour period. That was going in from the 2nd to the 3rd from that flare action. And so, that's a lot. 450. It was down as much as down to 400 kilometers a second solar wind, and then it got jacked up, and that's why you see this here, right there. That you can see the KP index. We ended up getting a couple red bars from it going into between this is where it makes it to the Earth, and so it affects us, and you can see the 2 red bars in there, and then it starts to back off again. But it did squeeze the ionosphere, and weather is controlled. Like 99.9% of weather on planet Earth is based off of solar activity. So earthquakes. When you get these things, you get earthquakes. You can actually predict earthquakes from this. There's books out there now starting to follow this research that I've been following for decades now. You can predict generally where an earthquake's going to come from the action from the sun itself. Yeah, a little bit faster than Tesla. The most you usually ever see it get down to is we're at what we call solar maximum right now. The sun goes through an 11-year cycle, and we are a year and a half, 2 years away. We're almost 2 years away from solar maximum total. And so when it hits that peak, then it starts to go down, and we'll find solar winds like 6-7 years from now, 5-6 years from now. It'll be drifting down into like the 275, 250 kilometers a second. Solar wind will drift. That's that's a lot. Seeing speeds of 200, jumping from 400 kilometers a second to jump to 650 kilometers a second. That's a lot of speed. We're not talking an hour, we're talking second. So, the matter of fact, a lot of the environmental movement doesn't pay attention to the sun at all. They just blame carbon or something like that. So that's what they do. They keep on blaming carbon. I have no idea why they do that, because it doesn't. What do you call it? The carbon emissions have dropped over the last couple decades. Like 30 years, and are what is that spot up in the atmosphere that's gotten bigger? The ozone. The hole in the ozone layer is bigger now. So carbon, obviously, reducing carbon doesn't have any effect on the ozone. It's it's the sun that affects it. But that's this is just science, not this philosophy stuff. All right, from there let's drift over to at one time. Let me just say this about that. It's kind of interesting. There was at one time before quantitative easing, and I should have tried to help Janos identify that more with his webinars that he was doing and his videos. But at one point before quantitative easing, there was a few different market technicians that were following Sunspot activity. And when they followed Sunspot activity, what they saw was that they actually could see an effect on the markets itself, which was very fascinating. So where's that mouse at? Let's get back to the charts. There it is. So it is an interesting thing. It really is an interesting thing that the effect of our solar wind and so forth at one time had a bigger effect. Maybe that's how astrology in the end really got going. In other words, looking at different alignments of planets and so forth also reflect in many ways activity from the sun. And in other words, when these planets get into a certain configuration, sometimes there's more of an effect from the sun. In other words, like an umbrella versus no umbrella type of thing. You put an umbrella up, obviously you're not getting hit by the sun as much, or the rain. But when planets get into an alignment, you have the same type of effect where it's blocking the activity of the sun, or it's affecting other solar wind coming in from further out, that type of thing. So it's, there's a lot of interesting things out there about that. But anyway, there used to be some market technicians who were really, really good back I would say up until QE, up until 2008. They were, really good at picking up lots of activity in the market through sunspot activity, which kind of also coordinated with, a lot of. There was a couple of technicians that used astrology at the same time to market work, and also the moon. There was one. It was a Lloyd Cope out of New York. He's passed on. He was an older fellow, and then there was another one, Robert Hitt, and now there's one. Merriweather, I believe it is. Merriweather's the known astrology / market technician. Has a pretty decent track record. So there's a lot of interesting concepts to watching the math of the solar system and the sun activity. Just part of the game, it's always worth paying attention to, if nothing else. All right, or at least knowing it's going to occur. But you can see here, this is the, let's scrunch this up. This is the Tech 100. You can see we are off the bottoms of, them smashing this thing. Let's put it up on J4X. But it has not cleaned itself up in the sense of, there it is, the Tech 100. And when we show you on J4X, you're going to see how much it's down. You can see, going back to, what is that, basically September of, is that this year or last year? So that's September of this year, right? No, March, June. Yeah. So that's September of last year. Okay, there's a September of last year. And November of last year right there, okay? And there's July of last year. Now, because there's May of this year. So that was, where's the date on that? There's, 22. There's, why don't I see the year? And let's go look at the same thing with the S&P 500 or the Dow. Dow Jones Industrial Average is a good example. I mean, it's been outperforming all of them. Look how much it never challenged that same low there. Never even got down to that low. Whereas at this moment in time, the Tech 100 is still down there. Now, this is the interest rate problem, with that sector. There's a big problem with interest rates. It has a big effect on the Tech 100 because they're very interest sensitive. Whereas the Dow Jones Industrial Average and the S&P 500. Here's the S&P 500. You see, never even got down to that low, and it's trying to bounce back up. Now it's trying to go after this high of what was that? That was August. Okay, and so we can see that it's trying to lift up. It made a new low. Now we go over to the Dow Jones Industrial Average, and you can see the Dow did the same thing, but look at this. It's almost already there. It's almost gotten up to that area already. And that's because money managers, when they're, I don't want to call it confused, when they are in doubt of the direction of market, what they'll do is they'll lean towards buying dividend stocks, because this way they generate income. So, all right, traders, we're past the 31 spot. So we've been over an hour now. So we're going to call it quits. Everybody have a safe and smart weekend, okay? And we will catch you all on Monday, TGIM. And today is TGIF for us on the East Coast here in the USA. So happy trails to you until we meet again, which will be Monday. Happy trails to you, to all our trading friends. All right, traders, Metho, have a good weekend. Ta-ta for now.